Tim, thank you so much for taking the time to chat. We appreciate it.
Thank you for coming.
I want to dig right into the results, Tim, and iPhone revenue specifically, because as you mentioned, that was lower than expected, and that accounted for the revenue shortfall here. And I want to dig in specifically to the trends you're seeing in China, because you say something interesting, which it isn't just the economy there, it's also these rising trade tensions. What did you mean by that, Tim?
Yeah, if you look at our results, our shortfall is over 100% from iPhone, and it's primarily in Greater China. And so as we look at what's going on in China, it's clear that the economy began to slow there for the second half. And what I believe to be the case is the trade tensions between the United States and China put additional pressure on their economy. And so we saw as the quarter went on, things like traffic in our retail stores, traffic in our channel partner stores, the reports of the smartphone industry contracting, particularly bad in November. And I haven't seen the December number yet, but I would guess that would not be good either. And so that's what we've seen. And now there are a lot of things we can do to turn our business around in terms of both in China and more generally across. We're focusing on, if you look at iPhone more at a macro level, the story on iPhone is, in addition to the emerging market weakness, which is primarily in China, it's that there's not as many subsidies as there used to be from a carrier point of view. And where that didn't all happen yesterday, if you've been out of the market for 2 or 3 years and you come back, it looks like that to you. FX was a big challenge in the quarter. As interest rate hikes have started in the United States, there's more foreign capital coming in. That makes the dollar much stronger, and the translation, and we knew that was going to be a factor. It affected us by about 200 basis points. And then sort of in addition to those two things, we've started a program worldwide where we dramatically lowered the battery replacement price. And so we have sort of a collection of items going on, some that are macroeconomic and some that are Apple specific. And we're not going to sit around waiting for the macro to change. I hope that it does, and I'm actually optimistic. But we're going to focus really deeply on the things we can control.
And in terms of things perhaps that are a little bit out of your control though, Tim, I just want to touch on China specifically and go back to that, because the trade tensions are having an effect you're seeing on the economy there. But do you see evidence that perhaps Apple's also getting caught in the crossfire in terms of, is there evidence that Chinese consumers say, you know what, there's this dispute, there's tension, and they're taking it out on Apple in some way as well?
Well, certainly Apple has not been targeted by the government, and so let me take away any kind of doubt of that right up top. There are reports, sort of sporadic reports about somebody talking about not buying our products because we're American, maybe a little bit on social media, maybe a guy standing in front of the store or something. My personal sense is that this is small. Keep in mind that China is not monolithic. Just like America's not monolithic, you have people with different views and different ideas. And so do I think anybody elected not to buy because of that? I'm sure some people did. But my sense is the much larger issue is the slowing of the economy, and then the trade tension that's further pressured it.
And have you talked about, given that this is a headwind and more than you expected, have you talked, I'm just interested, to President Trump or members of the administration? This is a big, important American economy, and you're saying, listen, this trade dispute is really impacting our business. Have you recently talked to those members of the administration and conveyed that? You know,
I'm telling our investors first about what we saw last quarter, and that is the way it should be. But I've had obviously many discussions over the course of many months to be constructive and to give sort of my perspective on trade and the importance of it to the American economy as well. And I feel like I'm being listened to in that respect. And so I'm actually encouraged by what I've heard most recently coming from the US and from China, and hopefully we'll see some changes.
But given that those trade tensions, Tim, they do remain heated, given the pressure you're seeing, as you're speaking to traders, investors, and business people now, in the quarters ahead, how do you then navigate this?
Well, you focus on what you can control. And so when I look at this, I say, there's some weakness outside of China as well. I would have liked to have done better in some of our developed markets. And so how can we do that? Well, the subsidies are fewer these days, that's true. But we can start, or we have started a trade-in program. And we started it primarily because it's great for the environment. It keeps a unit with someone that wants it, and the person who wants a new one gets one as well. And it's great for developers and so forth as well. But we haven't really marketed it very much. And the truth is, to a consumer, the trade-in looks like a subsidy because it lowers the price of the phone that you want. And so just let me give you an example of that. And so the retail price of the iPhone XR in the United States is $749. But if you happen to trade in a 7 Plus, which many people are in order to get that, the price goes all the way down to $449 or less. And so there's a substantial benefit, economic and environmental, from trade-in. We're also working on placing ability to do monthly charges in. And so it begins to look like more the traditional way of paying for it through the carrier by taking the rates out for 24 months or so. And so you wind up getting an incredibly new phone that's so much better than what you've had for $20, $30 a month or so. And so we're doing that. We're also putting a lot of focus on the service side. Our stores are unbelievable at service. And the ability, people are very worried about transferring their data. They're very worried that this new phone, there'll be something that they lost in the process. And so we're putting a lot of emphasis on doing that and doing that well. And so those are just some things. The other things, which are not different than we thought, but did affect our revenue in the quarter, are things like we had some supply constraints. We had an unprecedented number of new products during the quarter. We had new watches. We had new iPad Pros. Both of these were constrained for all or most of the quarter.
Did you think, looking back, Tim, do you think you try to introduce too much new too fast?
No, I think our style, Josh, is we release things when they're ready. And I think that's the way it should be. If you ever start worrying about cannibalizing yourself, you can talk yourself into not doing both things. And so all of our products were ready over that period. Now, would I have liked some of them to be ready a few months earlier? Of course, I would always like that. But generally, we're still going to march down the road of shipping things when they're ready.
And let me ask you, Tim, with this release, investors get a lot of information and metrics. But as you guys spelled out, listen, there's going to be some changes in disclosure. You're not going to get the number of iPhones shipped anymore. You guys don't see that as a relevant metric so much as in the past. If that isn't the data points that investors should be focused on, what are the data points that investors should focus on?
That's a good question. Look, what we did years ago, actually with Apple Watch, we've never disclosed units on watch. Why? It wasn't just because we were secretive people. It's that we looked at this and the watches were wide range in terms of pricing. We knew that eventually we would have a cellular watch where there's a stainless steel versus an aluminum. There's even an edition. And so you begin to say, what value is there in adding these things up? I've made the comparison, it's sort of like you and I going to the grocery store and putting things in our cart and coming up to the register and the person saying, how many you got? It doesn't make sense to add them together anymore because the price ranges are so wide. So we didn't do it on watch from the beginning. We've never done it on iPod. As we now step back from the phone, we have phones being sold in the emerging markets, like an iPhone 6S, for around $300. And so you've got a range from $300 to $1,000, or in some cases over $1,000, depending upon your selection of flash and so forth. And so this thing has lost its meaning. And so we felt that at the end of the day, we were giving investors and sort of pointing them to something as if it had this incredible importance to it well beyond what it does. That doesn't mean we're never going to comment on units again. If we think that we can better explain results with talking about units, I'd be glad to say something about them. But generally, to have it on a every 90-day clock of releasing this, I think it does the investor a disservice, frankly. But now we are making additional disclosures as well. Like, for example, we're going to give the gross margin of our services business. We've never done that before. Services has grown, an incredible amount. We're going to have report over 10.8 billion, and when we report later this month for last quarter, that's a new record.
And what drove that, Tim? Any color? Was that App Store? Was it music?
This is incredibly exciting for us because so many things hit records in there. The App Store did. Apple Music hit a new record. Apple Pay hit a new record. Our search ad product from the App Store hit a new record. iCloud hit a new record. And so, it's very wide, and each of the geographies hit a quarterly record. So even in China, the App Store hit a quarterly record. Why is that? It's because it's driven by the installed base. And our install base grew nicely year over year in China as well. And as I say in the letter, we picked up 100 more million active devices over the last 12 months alone. So this is an incredible number. And we've got some interesting things in the pipeline on services, and of course we do on products as well. And so that's sort of another way to grow the company. A
final question here, Tim. You say you're going to end the quarter year 130 billion in net cash.
That's right.
Apple has a history. You do a lot of acquisitions. They tend to be those smaller. Biggest was 3 billion for Beats. Do you think maybe, given that cash position, would Apple be open to maybe shifting how it thinks about acquisitions and doing acquisitions that maybe investors would think are bigger or more meaningful?
For us, we've never changed our view on acquisitions. We've never said, "Thou shalt not buy a big company," or "Thou shalt not buy a medium company," or "It has to only be in this country or that country." We've always looked at it from a strategic point of view and asked, what does it do for the customer? What does it do for the user? And so the vast majority of ours have been technology and people that we think would bring a better user experience, that there's a feature or something that we could do in the future and that they could help on doing that. But that doesn't, I've always been very clear, we look at many, many companies, including very large companies. We've elected so far not to do those because we haven't found one that we say, wow, that's a nice intersection with Apple. But I'd never rule it out. We do have a lot of net cash, and I believe the company's stock is an incredible value, and so you can bet that we're going to be buying some stock under the plan that we've had out there for quite some time.
All right, Tim, thank you so much for your time today. You were generous. We appreciate
Thank you.
it.
It's good to talk to you, Josh.
Thank you so much, sir.